Nvidia's down, the market isn't. Let's talk about why. Rachel Evans, Bloomberg Managing Editor for FX and Rates Coverage for the US and EMEA, joins us now. Not exactly your wheelhouse, but nevertheless, Nvidia's down a reasonable amount, but not a lot. The market's not reacting a great deal. There doesn't seem to be a ripple effect in a meaningful way at this point in time. Can I think of Nvidia as idiosyncratic in its own little bucket? Like, is that a step too far here this morning?
I think it's not idiosyncratic. I think it's something that people have been looking for. I mean, it's seldom, as you point out, that this kind of crosses my desk, that we get into sort of thinking about single stocks and earnings. But Nvidia is such an important driver of the S&P and the Nasdaq in terms of their returns this year that I don't think anyone has been able to kind of take its eyes off it. You know, it's become to have the same weight as a Fed meeting in terms of how people are kind of looking at the earnings. So it's not necessarily idiosyncratic, but I think what we're seeing here is that the numbers were good. There's no big issue there. It's just that they weren't absolute knock it out of the park. Amazing, exactly. And it sort of speaks a little bit to how much froth has been in the market, that we've become really used to seeing just absolutely sky-high figures, sky-high beats. And, you know, maybe we're just starting to see a little bit more realism come into the market. But let's not forget, these are still crazy good numbers. Like, you know, if we are to see this continue, like that AI boom is still very, very strong indeed. So I think kind of we need to just sort of, the market is digesting this. Yes, there was, you know, a little bit of disappointment. There's been a lot of hype, a lot of people putting money in, a lot of retail investors putting money in and expecting to see kind of, you know, to the moon type performance, you know, a la Bitcoin. But instead, you know, we've kind of started to see, you know, this has to have some fundamentals, and therefore people are just taking a little bit of heat out.
How does the Fed play into all this, especially at a time when AI was also supposed to be, in the words of Larry Fink over at BlackRock, the solution to our labor market problem? Is the Fed paying attention to something like this, or is still, say, the PCE number tomorrow the highlight?
I think the Fed has been very clear that it's looking at the data and specifically looking at inflation, but also labour. And I think we've got a very important jobs print next week. But to the degree that, like, you know, the stock market kind of does play into their thinking, it reflects wider concerns about growth. It reflects wider concerns about inflation. So when you think about Nvidia, you know, given how important it's been to S&P this year, it does give you a sort of read on the health of the tech sector, which has been a huge kind of like power of growth in the US economy. So I think they are looking at it, and they are interested to the degree that, you know, it gives them a gauge on kind of the health of that sector and therefore a health of the wider economy, but not necessarily something that they're going to be watching as closely as you say. You know, we've got GDP today, PCE tomorrow, and then I think jobs next week is going to be the really big one. Yeah,
I want to pick up on that growth data out of today. The Fed is going to be watching GDP, or is it just GPT for the Fed?
Yeah.
Nice.
I think, you know, GDP is going to be the second reading. So, like, you know, we're not expecting to see kind of like anything monumental coming through in that. But, like, it's another kind of gauge of a healthy economy. And at the moment, the Fed is preparing to cut. It needs to see this data go the right way. So it's going to be something that they do check in on.
Well, Rachel Evans, thank you so much for joining us. Bloomberg's Managing Editor for FX and Rates Coverage for the U.S. and EMEA.